Hey everyone, it's Paul Nagpal from Remax Hallmark. I just want to quickly make this video and give you a quick update on where the real estate market stands. I know I haven't done a video in a long time, and part of the reason is that doing a video is so much more complex. Like you gotta look good. Not to say that I don't look good all the time, but hey, that's just my opinion. Monica would disagree. But you gotta have the right lighting and so on and so forth, and then kind of have everything lined up and so on and so forth. So I said, you know what? I just gotta get this video out. Gotta give you a quick update. There's been so much happening in the marketplace that I want to share with you. So here goes. So I was away for a little while. I'm not sure. Maybe a few of you know, but I was away. For about 15 days. I went to India to see my parents, and then we were in London. With Lentera Developments. We work a lot with Lentera Developments, and they have a couple of very, very, very interesting pre-construction opportunities coming up. So stay tuned. I'll be talking about that towards the end of this message. Where's the market at right now? So if you look at the latest numbers, and I think everyone's looking at the numbers now, so I don't want to spend too much time talking about what the numbers are, but basically, look, bottom line is that the residential semi-detached, freehold, townhouse market, that's kind of cool at best, and the condominiums have been doing very well. So the reasons for condominiums doing very well at the moment is, of course, affordability. It's interesting. Semi-detached and townhouses across the board are doing okay. Detached homes are the ones that are kind of suffering. If you were to look at the reports in the media that come out all the time, that talk about average prices. Average price is not the right way to look at it. I mean, average prices, that's for the whole world except my clients, okay? So you as my clients need to know better, and that's something that I hope to do with these little video messages too. Average prices don't mean anything, because what is truly an average price? Average prices are a very broad indicator that don't bring much value. There was a very interesting stat. If you look at the median prices instead, so there was this report that I read, and it basically said that the prices are down, that they appear down across the board in a single detached housing market because the average is down. But forget the average. If you look at the median prices are up. And if you don't know the difference between average or median, I'm sure you know the difference, but you've just forgotten because this was taught to us back in elementaries, middle school math. So median prices are a much better way of looking at things. So median prices actually are very stable. So the difference, the reason for these glaring price drops that appears on paper is because there's a significant decline in the higher end homes. So when I mean higher end prices of homes, I'm talking 1.5, 2 million and up. Now those ones have come down significantly, and when you bundle them together in an average, it looks pretty significant. But truly, the median prices have not dropped that significantly, and the median prices will continue to stabilize, and actually my prediction is they'll now begin to go up in 2019. Every time you read an analyst report, look for median prices, not average prices, okay? Condo market is up significantly, again, double-digit gains year over year. And that's primarily because of affordability. People can't afford houses. The houses that they can afford are quite a bit out of the city. So instead people say, hey, you know what, we're going to live in the city and be in a condo. But we were in London, as I mentioned, and just I was walking around in London, and curiously enough, and that's how weird real estate agents are. I was walking around and I saw a real estate office, and I went in and took a look at some of these listings, and this real estate office was not anywhere close to central London. I mean, it was on the peripheries. It was on the fringes. 1,100 square foot condo for 3.9 million pounds. Okay, so we're not anywhere even close to that. But that just shows you how much of how much space do we have to grow in terms of being, price appreciations. Look, we're nowhere close to as a city as London, and hence our price reflects the same as well. But condo prices have gone up again about 10 to 11% year over year. And I think they will continue to go up. I just don't think it'll be at the rate of 10, double digit. I think they'll probably fall back into the typical, 5 to 9, 6 to 9% growth going forward, because the condo prices have also escalated quite a bit. So again, if I had a graph, if I could show you the graph that I usually draw when I meet people in person, it's basically the detached market had gone up too much, too quick, and condominiums were lagging behind. Now condominiums have picked up, detached market has cooled down, so I think the condo gains now going forward are going to be in the 6 to 9% range. Okay, so that's that. Interesting stuff happening in the rental market. So rental market is kind of slow at the moment, and that's seasonal. In the summer, the rental market was crazy hot. There was multiple offers on almost all the rental listings downtown. Just to give you an example, I was trying to find a condo for this referral lead that came in from one of our clients. And I did a search, and I was looking at Etobicoke, North York, Scarborough, and of course I won't even mention Toronto Central, but a one-bedroom condo, I could not find anything under $1,700. That's how severe it is. We leased out a one-bedroom condo at Dufferin Lawrence at $1,875. We leased out a condo at Scarborough Town Center for about $1,700, $1,750. In fact, downtown, the average price of a one-bedroom condo now is about $2,200 without parking, and that's about a 500 square foot condo. So market for rentals had gone up quite a bit, and I think it will still continue to go up. But right now it's slow, and that's seasonal. That's basically because we're caught between people who've already moved in, and there's going to be a whole bunch of people who are going to be looking to move in right after Christmas. And also a lot of students that kind of move in for the January term. I was away on October 17th, a momentous day for Canadians. Weed becomes legal, and right after Canada Post goes on strike. So go figure, but a lot of people, a lot of my clients have expressed interest in finding out a little more about this, how this is going to impact home values, if someone has consumed or grown marijuana on a property now legally, how does that impact? I mean, what difference does that make to the lender? Because that was a big deal. Because, for instance, if you grew marijuana illegally, and if it was discovered that there was illegal growth of substances on premises, that kind of projected a stigma on the property, and that did not bode well for the property itself. But now, marijuana is legal and growing plants is legal. So I'm actually going to try to get a lawyer one of these days, and we're going to do like maybe a Facebook Live or something like that. And I'm going to try to have all your questions answered. I'll send out an email, and I'll have my own questions. From my perspective, if there was any type of production of marijuana on the property, I think that should be disclosed as far as I'm concerned, because that's something that the potential buyer might want to know. I just believe in full disclosure. I believe in disclosing things up front, and I think that's the prudent way of doing business. So another interesting development also that happened this week, which got some media coverage, but I don't think it got nearly enough that it deserves. Basically, OSFI, the entity that controls, how the banks operate to a large extent, and to how banks govern themselves and policies for lending and so on and so forth, they came out and now are asking the banks to be really mindful of how home equity line of credits are handled. So for instance, if let's say you had a home equity line of credit of, let's say, $500,000, and you were going to take $100,000 from it and buy a pre-construction condo or use it for some other purpose. If the bank deems so, they can now they will now actually have to see if you're going to be able to afford your new purchase or your new anything that you're going to try to finance, if your HELOC, home equity line of credit, was being utilized fully. So they're going to try to have your ratios work out with 100% debt utilization, which is a big deal. I mean, you might not get the full scope of things, and I would be more than happy to kind of maybe do something separate completely on this. In fact, that's exactly what I'm going to do. I'm probably going to have Brenda come in, Brenda Manning from TD, that we work very closely, but I'm probably going to have Brenda Manning come in, and we're going to have, again, a Q&A and discuss what are the changes of what are the impact of this change that has come in. So I will probably do a separate video on that without taking too much time. I know this has become already too long. So I want to talk about my prediction that I had given for 2018. I had basically said that for anyone who is looking to buy in 416, if they do not get into a condo in 2018, they're basically going to be renting forever. And it definitely seems that way. The condo prices have slid up. The rental prices have slid up. So the affordability is eroding. The interest rates have gone up in October. And there's another meeting, I believe, with Bank of Canada in December. I doubt they're going to raise the interest rates on that meeting. But I do know that next year, they're probably going to have another couple of hikes at least. Please make sure that, if you do have a line of credit, you are taking care of it diligently, right? Borrowing for investing versus borrowing for completely discretionary spending, like cars and trips and so on and so forth, completely different, okay? So just be mindful of all these changes that are coming in. Anyway, going back to my prediction that I had for 2018, I had basically said that, hey, you know what? If you do not get into the condo market this year, it's quite likely not going to happen in the near future. And that certainly seems to be the case. 2019 is going to be interesting. I'm going to be looking at some other data and probably give out my predictions at some point soon. There are three very interesting condo projects you got to be aware of. First is Notting Hill Condos, and this is coming at Royal York and Eglinton. This is at 4000 Eglinton Avenue West. And for anyone who is looking to invest in an affordable condominium, pre-construction, 15% down for the first year, very, very affordable. Anyone who's looking to get into the market, and again, mark my words, pre-construction condo market is going to continue to do well. And if you do not get into it now, in the next year or so, even that's going to pass you by. Because I'll give an example. There was a condo project released in Whitby at $625 per square foot, starting at $625. Okay, let that sink in for a second. That means a condo in Whitby, 1,000 square foot condo in Whitby, is $625,000. Did that sink in yet? Yep. So in Toronto now, downtown for instance, the norm is now $1,100 a square foot. This project in Etobicoke is going to be anywhere between $750 and $800 a square foot. Could be less than that, but we're going to get the details around April. But anyway, if you're interested, if you have any inclination of an investment condo in Toronto, Notting Hill Condos, I'm going to put the link to my website for that below. So please do subscribe, and you will get constant updates on that. So that's coming. That's going to be very affordable. LRT is going to be right outside your door. It's a four-phased project. So you got to get into phase 1 and phase 2. And by the time 3 and 4 come along, you would have already gained from the appreciation that the builder would have built into the prices. So for instance, in phase 1 and phase 2, prices are the cheapest. By the time phase 3 comes along, prices are higher. And 4, so even higher. So about 2,000 units, 4 phases is going to be great. So you have to look into that. The other project that we've been working on very actively is the Maverick, which is at 333 King West. That's bang downtown, right opposite the Beltiff Lightbox. Amazing location. It's we've sold many units there, and I know a few of you who are going to be watching this. You bought there too, so congratulations. You've scored an amazing deal. There are still great units out there. It's probably still the best project downtown for the value. The price per square foot starts at about $1,100 a square foot and goes up, so $1,100 to $1,300 a square foot. Compare that to Big on King, which is 533 King that came out, and that prices started at $1,500 a square foot. So that's becoming the new norm. $1,800 a square foot is the projected price for a condo downtown in 4 years. Let that sink in too. The other project that we're working very actively now on is 50 Schollard, and again, this is an ultimate luxury building. It's in Yorkville. It's about $2,000 a square foot. But when you look at what it offers, it's amazing. Only 77 units across 40 stories, private elevators, the highest end appliances, 2 parking spots, you name it. Very, very, very exclusive. So if you have someone who's looking to buy in Yorkville, I can hands down guarantee that this project, 50 Scholar, is probably going to yield the best return on any project that's out there right now. And I can discuss that in a separate video, but exclusivity is the primary reason. 70 units in a very exclusive building. For instance, Four Seasons, which is right opposite, it's almost at $1,800 a foot, and there's no exclusivity whatsoever. I mean, it's a full-blown big condo building, plus you're sharing the amenities with the hotel. So anyway, great project. 50 Scholar, Maverick condos, which is again downtown, amazing, $1,100 square foot, and Notting Hill condos that's coming soon to Etobicoke. So I'll keep you posted on those, but this video has already taken up a lot of your time, but thank you so much for watching, and I'll be in touch with more updates. Thank you.